All right, you can click on Got It for recording. All right, welcome to this week's for the weekly top-down analysis. This is for the week of July 24th, as we get into the last week of trading for July, and then we head into August, which is the last, typically, August is like the last summer month of trading, where a lot of the volume will start to come in, and it will come in pretty heavy. August, September, October is heavy. So it's going to give us a lot of opportunities, and the market's going to be moving a lot on S&P 500, gold, oil, and Forex, and especially the dollar. So things will start moving in the third quarter, sure. All right, so let's talk about the news event, scheduled event this week. As you can see, there was nothing on Sunday as opening, but through Monday night, we had a lot of Euro stuff, right? We got a lot of Euro PMI economic data, flash, German manufacturing services, and then a few pound. We're getting ready to have a flash manufacturing PMI news at 9:45, and that will affect dollar a little bit. Gold will definitely be impacted, and S&P 500 will be impacted. So we'll be looking out for those trades, but typically we like to trade a New York opening at 9:30 and take a look at that, but 9:45, that's when things will be moving. Anyway, we're not going to be trading the opening range unless we see a good setup. Other than that, we're just going to wait till 10:30 after the opening range. You only want to trade the opening range when the thing gets volatile like that, is when you see a great advanced setup based on the model, based if it's a range expansion, contraction, and if it's a turnaround Thursday, things like that, that we teach and that we trade on S&P 500, right? Okay, moving on to Tuesday. We got a big week. We got two big rate decisions, right? You guys are going to see it in a minute. So Tuesday, just Bank of Japan, CPI, and then nothing else for the rest of London session, right? When you get into New York session, the only thing we have for Tuesday would be the consumer confidence, which is not a level 3 or level, like a level 1, should I say, news event like CPI, FOMC rate decision, and so forth. So just another day of, just regular, normal range conditions, okay? So when we get into Asian session that night at 9:30, Australia will be moving, okay? It's CPI, it's still CPI data, 9:30. If you're in any of the odd pairs, you may want to be awake just to kind of make sure everything's going according to plan, right? So 9:30 is pretty late for PM Eastern time for those in the UK. Obviously, that'd be more like 2:30 a.m. in the morning. But if you're in North America and Australia, you should be fine. And that would be for Tuesday, Australia Asian session. Okay, now moving on to Wednesday. This is when things get heated up and get heated up real good. Nothing in Asian session. So everything's going to be nice and quiet, just a regular, normal ebb and flow of the market. So just things like that. When we get into New York session, nothing in the morning. It's going to be a quiet storm in the morning. It's going to be like the calm before the storm. And you guys can see the red right there. 2 p.m. Eastern time, it would be ding, ding, ding. It will be the FOMC rate decision. So on Wednesday, we'll do a special, let's put it this way. We'll do a special extended edition New York session on Wednesday. So instead of the normal 5 hours, we'll probably go on all the way to 2:30. So just keep your computer on. You can probably come back, log off, log on. That's fine. I'll keep my computer on. I'll keep my screen open. I'll keep the session open until 2:30, so we can actually watch this, and I'll help narrate through the session. And we'll see if we get a setup, if there's an opportunity. If not, we're just going to leave it alone. But at least we'll get to see exactly what's going on, how is it going, and how is it impacting the other pairs. What can we expect moving forward in the next day? Very, very important. Okay, Thursday. After we get the FOMC rate decision, we'll see if there's a continuation and a fade in London session, which will be all right here. Specifically, there is the euro right here at 8:15. That's not London session, but it is a euro pair. That will happen at 8:15 a.m. and that is their bank rate decision. And I'm going to go from either 4 to 4.25, which is a 0.25 rate decision. I forgot to mention about the US. US is looking to raise interest rate, as you saw before I even mentioned that. They're looking at going from 5.25 to 5.5, 0.25 rate decision. So let's take a look at the CME projecting board. And let's see what they have. Let me refresh the screen real quick. Set all cookies. Ding, ding, ding. 99.8% probability. I don't think I've seen it this freaking high on any of the months. It's always up to 90, maybe 80, but 99.8%, they are going to raise interest rates. So I think that's kind of pretty much, you can say is going to be priced in, right? All right, so moving into Thursday, we got Euros rate decision that'll come in, that affect the rate decision. And you guys already know, right? Whether the rate decision is positive or negative, it really comes down to how the market's going to react, right? And that's why we don't trade the news, because it's gambling. You don't know how the market's going to react, and you don't know how the market's going to react afterwards. You just know it's going to react. And we just need to trade after it's react, right? So basically, we're waiting for the market makers to see which volume, which way they're going to push the market. That's all. Okay. So on Thursday, after the FOMC rate decision, the day after, right, we have some U.S. economic news, advanced GDP, unemployment claims, and things like this. This will either fade the market or continue the continuation effect from the FOMC rate decision from Wednesday. Okay, now moving on to that Asian session we had previous night. Well, not this night, but Tuesday night was the odd Australia CPI. But this one we have a third bank rate decision this week, and that would be JPY, and that will be around, I'll get the date for you guys. I think it's going to be around 11. Let me see, economic calendar, trading economics. There you go. Trading economics is a very good fundamental calendar that will not do anything wrong for you. Let me set the countries. Let me clear it. I just want Australia, Canada, Euro area, pick Japan. And then I would like, where's Japan? Oh, got New Zealand. We got Japan. Did I just pass Japan? I did, right? Japan. And then we also have the US, the United Kingdom. Did I miss any other currencies? I think I got it all. All right. Yeah. Australia, Canada, Japan, Euro, New Zealand. Right, gets Australia. Oh, switch French. Switzerland. All right. So on, where is that? Thursday night? Japan, where are you? There you go. 11 p.m. Eastern time, right there. So at 11 p.m. Eastern time, we will have the Bank of Japan interest rate decision, and you can already see they are not expecting to raise interest rate. They're not expecting to raise it, and we kind of already knew that already ahead of time. They've already mentioned it, and they've already said it. So they said, hey, don't expect it. We know you want it. Who cares? We don't care, and that's what we're gonna do. All right. That's Bank of Japan, and that's going to be the third bank rate decision that we have this week. So we got Wednesday, USD, Thursday, New York session, Euro, and then Thursday, Asian session, Japan. Okay, 3 big ones this week. All right, and then Friday we're going to wrap it up with a little bit of Euro news, and then whatever Japan wants to say, see if they can soften the impact that is getting ready to happen on Bank of Japan. So we never know what's going to happen. They can raise interest, they cannot raise interest rate, and they can raise interest rate. If they don't raise interest rate, the market may not even react. They say that's priced in. We already knew Japan's not going to do anything, right? They may not even do anything. So we just got to be able to brace ourselves, be ready for it, and then get ready to trade and see which way the market's going to go. If it means more wait time for those who waiting for the short or who's in the short for JPY pairs, or does it mean it's going to go in our favor, right? We don't know. Okay, so Friday after that, and then we got the Canada GDP report and USD core PCE price index, and that would definitely move the market on Friday. And whatever the direction the market ends on Friday or starts to trend on Friday, it's most likely going to end that way. And what I mean is, like, say for instance, on Friday, we come out of London session and into US session, and let's say the market at 8:30 was short, and then all of a sudden start to pop and start to move up, start to clear structures, then most likely going to happen. If it goes up, we are going to close up. Okay, so that means you can basically almost take a trade buy, and there is going to be an 88% probability that your buy is going to play off for the remainder of the day. It may pull back, but once this thing is set on Friday, it basically closes in a bull or bearish or whatever way it's direction. So it's a pretty good indication that when you trade on Friday, it's really, really good for a non-farm payroll Friday, right? So we'll definitely try to take an opportunity on Friday to see if we can get a trade in. And that will wrap up the week. So I hope you guys mark your calendar, you got your days, you got your currency on which day is which, okay? So let's take a look at the current conditions of the market from a currency strength perspective. As you can see right now, our number one strength, our strength holder, the king of the day for Monday is, wow, New Zealand, ding, ding, ding. All right, and then we got Japan. Japan stayed strong the whole session. Nice, Japan, I like that. It kicked up right out of Asian session, and it stayed the king the whole London, came back a little bit, and then boom, just kicked off at Asian opening, and then boom, kept strong, and then New Zealand kicked off right at Frankfurt open at 2 o'clock, and it just took off at London opening. So at 3 a.m. in the morning, Eastern time, you can see how the market reacts right at London open between 2 and 3, right? So if you trade Forex, it's very, very important. We got Frankfurt open and you got London open, right? And then its whole session over here, we all know that's Asian session to the left, which is right here. So all of this is Asian session, right? We got Japan and we got Sydney opening. So the only thing that's really moving was JPY, Australia, New Zealand pairs, right? We all know that. So this is the Asian session. We got Frankfurt, Germany, right? Frankfurt opening, and then the market starts to shake up a little bit, and then you have London official open at 3 a.m. Eastern time, and then look what happened. You see how it bunches up right here, and now all of a sudden it starts to break away. It's like you get into a huddle and like break, right? Or you just hit a pool. You starting off to hit the pool table, and then boom, you hit all of these 8 balls, and then 8 balls or 8 pairs, and you hit the cue ball, and it goes in here and break it, and then you got all these pairs start to scatter, right? That's kind of an analogy I can use, but you can see how that works during London session, and why London session breakout is so popular for people who trade it, right? So that's when London volume kicks in. They are the king of Forex, we are the king of equities in the New York. But when London session kick in, you can see how the Julian cook off, and then what's dropped? Ooh, euro, Swiss francs, and then following by British pound. Swiss francs did recover a little bit, so that did had a little bit of recovery, but they are still weak, and the dollar got weaker too. So right now we got the euro weak, pound is weak, and the dollar is weak. So euro, EU, and GU is mostly probably ranging. And then also U chef. Okay, these pairs are ranging, just going maybe not much, probably just going sideways as of right now into London session. I haven't looked at the chart, but we'll look at it technically. And then of course we got Australia, we got Canada is kind of strong, but New Zealand and Japanese yen is definitely strong today. You don't expect, Big Brother to be too far away for Australia and New Zealand. If New Zealand's strong, most likely Australia is going to be strong. Okay, so that's our current strength meter right now. Hope that was helpful. And we'll see, let's go to the charts and let's take a look at our trading buddies, right? So let's go to Euro, no, not the Euro, sorry about that. Let's go to the dollar index. Go to the dollar index. Let's take a look at our dollar from a daily perspective. And it's doing exactly what we said it was going to do, right? Except I have this up here. So let me go ahead and move that and kind of reassess, because it did move up. And we need to see what's going on technically, or what's going on with the charts with the dollar. Okay, we know that's the peak. And we know that happened right about, get my calendar here, that about September, right? So we had September 22, market start to happen, start to turn around. And now all of a sudden we're raising interest rate, we raise interest rate, we raise interest rate. And we're going to probably do another raise interest rate, okay? So the market would just, creating all this kind of free money with not raising the interest rate, not raising interest rate, or hold on, I apologize. So we did raise the interest rate starting last year. That's what's caused the strength of the dollar. There you go. That caused the strength of the dollar, caused the strength of the dollar. And then we started cutting back on the interest rate, but we did raise interest rate. And each time we did it, it went up and went up. So I don't expect the dollar not to do anything different in regards to do a little bit of pop. But here's the thing, I do not suspect the dollar to go higher than what we're probably seeing right there. Okay, look at that. I don't expect it to see any higher than that. If we do, right, and I'm not going to say, hey, I'm going to call the market and I'm going to tell you exactly what it's going to do. I don't. I can only tell you technically and what happens fundamentally, and we got to see if the technicals plays out fundamentally, right? So the interest rate is going to cause us some strength in the dollar index. So in the dollar index currency, we should expect to go up. Okay, well, will it? Does it have a reason to? What's the case? Well, we know we had this big old drop, and everyone knows in the FX Prosperity Academy, when you have anything drop like a 90 to 70 degrees, we are going to have what we call a rubber band effect. So you're going to have a snapback of at least 50%. Guess what? Did that drop like a 90 to 70 degrees? Yeah. Is it snapping back to 50%? Holy smack. Yeah, it's basically almost there. Let's take a 50% fib and let's really measure it out. That's 50%. It's pretty damn close, right? Real close. And we'll probably say it's damn near 48, 49%. So we have the interest rate decision coming on Wednesday, and we're going to probably expect to see a little bit of ranginess in this pair, not like moving crazy, because they know we have a big FOMC rate decision coming on Wednesday at 2 p.m. Eastern time. So I can tell you, typically this should raise the currency up, okay? So we are looking to at least that. And guess what? We're going to be at a major weekly supply zone. Okay. And let me make sure I get this. There you go. So we'll be at a weekly supply zone right there. That's a nice order block. And guess what? It cleared up all this imbalance, like just like that. So that's going to be a good thing. Now, one of the things that I do got to point out is as you zoom in on this dollar index, there's a couple of things. Well, we have this. This is not a gap imbalance, but that is what we call a volume imbalance. So we had a volume imbalance right there. That was cleared up, as you can see, mitigated. And if you could look up between these two daily candles, if you see any more, oh, there it is right there. Yep. You know what's funny? We don't have any wicks on there. So when you don't have any wicks, at least like this one, you have 2 wicks. Right? You don't have the candlestick body touching, but you have 2 wicks. And I mean candlestick body touching, like even that one, like this. You see how it overlapped? That is balance. You have the candlestick come in, you got the next candlestick body come up. That is balance. That is pretty balanced. Now, here is imbalance, right? But in between the candlesticks, that is balance. That is not balance. Believe it or not, it's a small one, but it's still a volume imbalance. Right here, there is not any wicks touching. So what we call that a gap imbalance. It's still a volume imbalance, but it's a different type of volume imbalance. In fact, it's the strongest between the two. Oh, so okay. So you got several, you actually got like several different types of volume imbalance. You got a volume imbalance, got a gap imbalance, but the gap imbalance is your strongest of the two. And when I mean strongest, it's like a magnet, right? It attracts that price to come back to mitigate it. It's kind of ironic. It's like right next to the what? Ah, so you tell me all I had to do was just hit buy and yeah, you could have done that and made some money or shorted, euro dollar and pound dollar. And yeah, that's exactly what we're saying. So I expect the dollar to come up here, and then I don't know what's going to happen once it get up here. We have another small imbalance here. You can see it, the little volume imbalance, and it's a nice area to mitigate and clear up all this efficiency. Now, what I will say is that if we do not take out this high, you would know it. We're going. And you can see how it's looking. What does that look like? We call that a channel. Plain and simple, right? We don't take out that high, we're going down. If we take out this high, we're going to go after this high, we're going to go after this high. Okay. Now, is there any reason why the dollar will need to continue going up? Well, it actually depends on what the Fed says. This will definitely raise the interest rate. The interest rate, I'm sorry, will definitely raise the dollar to this level. Will it continue to strength? Will all be dependent on what the Fed say and do, right? If they say we're going to continue to look at one more interest rate increase, then yeah, we can kind of count on that. Other than that, don't count on it. This is going to be the last hooray on the dollar currency index for the last push up for 2023. Okay, and then that's it. We're done. We're gonna be done, and this is going to continue its bearish run. Okay, so as of right now, short term, since I don't have the crystal ball of what's going to happen for the rest of 2023, I need to see proof of evidence. So in other words, we need to see more evidence of what the dollar is going to do technically, right? So right now, we can call this bullish. Okay. All right, let's look at the other currency index real quick, just to kind of see from a high dollar perspective value, what are we seeing? Pound is going really, really strong, and then it's pulled back to this little area. We could expect to see a little bit more bearishness on pound as the dollar increase, maybe for the next week, maybe for the next 2 weeks. However, this is an area where it could continue to bounce up. You will need to see pound continue to weaken. And right now, it's looking like it's hanging on in this area, right? So we will see by this week, is pound going to start to look, for higher highs, higher lows, higher highs, higher lows, higher highs. If we break this structure and we stay below, then we're going to come down to at least this area right here. That's minimum. So that's minimum. That's coming out to this blue balance right here at this point. That's minimum. Now, whether it extends to here or not is it's an iffy. We have to break this structure. We break this structure, then yeah, we're coming back here. If we don't break this structure, then we're just going to probably come here, and then that's it. This is going to be target right here. Pound's going to get stronger. Okay, so I do believe we are going to get some more pushes down to the downside, and the reason why I say that is because we'll look at the other pound pairs and you'll see how they are. Okay, Swiss francs, historical high, nice, thank you. Swiss franc, okay, now fall, right? That's basically what I'm saying. We got Swiss francs way up there. It's been up here in 2015, 2011. We're an extreme high. We've been in a strong bullish run since last year, October. And it's like, okay, are you done already? Because look at all this inefficiencies. Come on. And you haven't rebalanced. So your rebalance point is way down here, right? So we're talking from this swing, we didn't even rebalance here. We didn't rebalance here. And then it just took off. So we have a big fall for Swiss francs coming soon. So all your Swiss francs pairs and crosses, we're going to see in a minute, we're going to expect bearishness Swiss franc for the remainder of the year. And that's what I'm calling right now. Okay. Euro, it's just going to be just like the pound. I expect to be a little bit of pullback on this bull run in this area. So I'm looking for Euro, even though Euro is looking to raise its interest rate. I'm looking for you to fall still. Yep, at least to rebalance. It hasn't rebalanced here. This is to be the first part of equilibrium right here for Euro. Canada, what are you doing? Canada is looking kind of bearish. So guess what? I am expecting Canada, as you can see in this channel. There we go. Looking for Canada to be a little bit of weak, come all the way down here, at least into this area. There is a big imbalance right here, right? So there is a discount imbalance here. I think it needs to come back. And I think I don't really know. However, this looks technically, it needs to rebalance to this level and possibly down to this level. And I can see that based on technical past historical events, right? So we can see how it's been doing. And we could expect with the dollar being strong, yeah, we can expect maybe a little bit of bearishness here for the Canada dollar. Okay. All right, Australia, what are you doing? Australia is looking kind of strong here. I think this is the balance points. It is the equilibrium. Okay, let's go. However, I do expect a little bit more Australia weakness for some reason. And if it bounces and it holds, then this is actually good. This is a good area. So I do expect a little bit of Australia strength, but not more than the dollar. The dollar is going to be crazy this week, right? Australia's, we're going to see what Australia does this week. We will. You guys know when. Yep. Tomorrow night, Tuesday, after CPI. It will either strengthen Australia or lower Australia. I can suspect it is going to strengthen Australia. So I'm looking for Australia to be bullish. Australia's economy is looking very good, pretty strong. They have some really good economic data, and that's why it's been maintaining this bullish strength. So Australia, yes. Come on, Australia, bring it in home, right? And why pound is going down, Australia going up, that's going to be great for pound Australia, right? New Zealand, yes. New Zealand is looking good, kind of bounced back. It was weak very, very weak here. And then it got a nice push up to this supply zone right here. Came back, kind of rebalanced, and we're looking for it to continue to bounce, right? That's how it goes. I think everyone knows that. You can look at it. You can see how the market moves. Bounce, 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 bounce. You know what I mean? So as long as it breaks the structure, break that structure, break that structure, break that structure, it's going to continue. This is the definition of an uptrend, right? Uptrend. And then we got this long, big old supply line. And as long as we break that structure, guess what? We are going to continue on to the what? To the next supply zone structure up here. It's plain and simple, nothing difficult. All right, that's how the market looks. That's how it's been going down. We got this nice reversal, came back in this nice little channel or a flag, if you will, on a higher time frame, like the weekly, right? That would be nice, like a nice little bull flag and boom, right? Don't trade patterns, but when I see it, I'll call them out. That's just retail jargons and retail theories. I don't play on that. We just see it, we recognize it, and guess what? We're going to wait for it, confirmation, and we're going to trade the market structure. So looking good at New Zealand dollar, appreciate it. Nice little daily strength. Please follow through. All right. Japan, what are you doing? What is this? Okay. All right. Nice fall. That was last year. That was painfully frustrating. All the way down to October 22 historical low, right? Historical meaning this is one of the lowest points and hasn't been this lowest point if you look at this particular price chart since this price chart goes all the way down to the year 2000. Okay, so since 2000, 23 years, we finally break this low right here. This was the low point. We finally break that low here, and we go to extreme low right here, October 22. Nice recovery, which we all knew it was going to come, and it came. Now, with the 50% of this move, that's interesting. Let's take a look. From this drop, this drop, did it hit 50%? I guess snapback rubber band theory that we talked about. Ding, ding, ding. Yay. Now, that would have been a horrible drop for you if you sold it, if you were trying to buy it up here, obviously. But if you were like bought it here, 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 then you would have made money here. Frustrating rate, but you would have made money, okay? So let's take a look at, see what the hell Japan's doing. They went to the rebalance point. Okay, got it out the way, pull back. And then this damn thing is dropping again. Drop. Got a little bit relief, but did it go at least 50% between this swing? Good point, let's check. From that swing to this swing down here, close, but not close enough. It's still not rebalanced, right? So the good thing is, this is a low swing. This is a nice break of structure. However, we did not hold above the structure. We did break it. Now we just need to see a follow through, right? Now, keep in mind that we know Japan's not going to raise interest rate, but does that mean that this is going to stay weak now? I don't know. That is what we're going to be able to see this week. Are we going to be able to see a follow through, which is what we want to see, or are we going to see just what we call, you're right, lower high, and then we go lower, right? That is going to be decided, and we're going to be able to see that when? On Thursday night, right? On Thursday night, that is going to be the deciding factor for Japan on what the market is going to do. Now, everyone knows Japan's going to be not raising this interest rate, so that's not going to be impressive, right? Attractive for the Japanese currencies. Okay, so does that mean this is going to go lower? No, it doesn't mean that, but it's saying that it could, right? So we got to be aware of that, because there is some market structure here that supports that down here, and then we can bounce. we're all going to bounce up. And that's what we're going to be able to see, right? We do have a little imbalance that's right here. I got this marked up. And we do have a strong support area, even though we have a little mild demand zone right here, demand zone, sorry. But we got some great imbalances here. We got some great imbalances here, and we got very attractive imbalances here. I know I'm trying to sell Japan to go strong, right? But I don't know if they're hearing me or if I can convince them, but I can tell you it has a very large supported evidence for it to go up, but that's not to say it can't come down. So we got to be aware of it. This is the rebalance points. I love that. So let's see if we can see this as a lower low, and hopefully we can create a this is a lower low, higher low. If this is a higher low, hopefully we can get a higher high. We're gonna see. We'll see. All right, let's get into our other pairs. We're gonna go right into gold. How is gold doing? It's inverse correlated to the dollar. Dollar does one thing, we expect gold to do other things, the opposite. And what is that opposite in this? Ooh, look at this one. This is my last analysis. I said gold was going to bounce, come back right here, and go down. Well, it went a little bit further than that. Yeah, I see that. So what does that mean? Well, it doesn't change anything for the fact that I do expect it to come down here still. All right, okay. So we are expecting the dollar to go strong. So if we're expecting the dollar to go strong, I expect this to pull down, right? So this is a nice recap, like a retest back to this little gap in volume imbalance. Came pretty close, and leading up to Wednesday, it's about one more day, right? Tuesday and then Wednesday, we could see a little pop, but I'm not expecting that overall. I'm expecting this. You see this over here? For value gap imbalance, for value gap imbalance, for value gap imbalance. These are like magnets for price to go, come on down, come on down. Right? This is the rebalance point for the 50% from here to here. Oops, not that tool. From this swing to that swing, that's the rebalance point. When we got here, we didn't quite rebalance, came pretty damn close. Well, this is the rebalance point for gold. I do expect that gold could come down, especially with the dollar expected to be strong. So I'm bearish on gold, and I expect it to come down to about 1840, right? 1840 for gold. I'm expecting some bounce off of this weekly demand level, and let's go. Meaning, I think that's it. And let's start breaking some records on gold, okay, for 2020, for the rest of 2024. So 2023, boom, and then start to recover. And then 2024, we're going to start to see some historical highs on gold. Gold has never been higher than we're talking $2,074 an ounce. So we expect gold. So if you're looking to buy jewelry, any gold, you may be able to buy some good deals for Christmas when this thing drops. Right? Gold chains, gold. That's funny. As a trader, you know the value of things before people in public even pay attention to, right? So we can see the value of gold coming down, and it's like, hey, this is a good time to buy some gold. Gold goes up, good time to sell your gold, pawn your gold. That's a good thing about being a forex trader. Would you agree? All right, moving on. Before we jump into the other markets, wait, hold on. Let me just go to S&P 500 since it's the mother of all indices. Look at this. What do you see? What do you see? We got this swing down, came down. That was the low. Got a double bottom. Then we got a higher high, higher low, higher high, higher low. Whoa, higher high, and it looks to be at a nice supply. What can we expect up here then? Well, that's not to say it can't go up, but for this to go up, that means the dollar would have to be weak. So if the dollar is not expected to be weak and expected to be strong, market's going to be inverse correlated to the dollar mostly. So we can expect a mild pullback, right? So I'm expecting it to come down to this equilibrium here. This equilibrium meaning not that equilibrium, because we did get balance here, We did get balance here, but that is the swing up. But I'm talking about from this one right here down. That's the equilibrium I'm talking about, from this swing to that swing. So I'm expecting it S&P 500 to fall to about right there. All right. So we're looking at about, I want to say about 41.86. How about that? So 41.86, I am expecting the S&P 500 to pull back nicely into this zone. And let's see what the market gives us. It's bouncing here for the last week or so, up and down, up and down. And it just seems like it's just waiting. Like this is on the daily candlestick, so you can't see the little minor candlesticks on the small time frame. We trade on the 5-minute time frame. And we've been getting some good trades up and down, but I am expecting this to have a nice big fall, and most likely it's going to happen this Wednesday. So expect a nice pullback. Got a lot of imbalances here that you can see lit it up with this Sonar Lab indicator on this here, Smart View. You can just, on a Smart Money Concept indicator, you can see where it lights up a lot of fair value gap for you. Very few here, and you can see there's none down here. Everything's just balanced out. So nice bull run, thank you. Okay, let's pull back a little bit. All right, just pull back a little bit and we'll see what we get. All right, expecting S&P and rest of the indices to go down. Oil, what's been going on, oil? Oh, you've been doing nothing but more than what I said you were going to probably do on the last top-down analysis. This is my analysis. Guess what? I'm not changing it. I'm not even going to move this thing. This thing is like almost to the T about what I said it was going to do. It's going to come up. If it breaks this, we're going. Going where? Right here. Weekly supply. Let me get that. There you go. Boom. There we go. Here we go. We are expecting oil come up. 81, let's say 82-ish. 82-ish even. Yeah. Yeah, 82. It's called 82 even right here. This is that one I was talking about. 82, and that'll be fine right there. So oil, keep pushing. We're in this nice little range. Keep pushing. And once we get up here, I am expecting a little bit of pullback down to this area. And we're going to see what oil does from here. Are we going to break higher, or are we going to come back in this range again? Okay, but for now, I'm bullish on oil. Expect to get it up to 82 within the probably by the end of the month. We'll see. 82 is my expected high for oil. Okay, before I get into the currency, let's jump into the cryptocurrency, all the way into Bitcoin. What are you doing? Almost close to what I expected you to do, but you're not pulling back that now. So I'm going to leave that there, because with the dollar expected to be strong, we may get a little pullback, maybe just a little bit, cover some of these imbalances, but it doesn't have to. It didn't cover that. It didn't cover that. It doesn't work the same way as regular currency. It does somewhat, but not technically the same. All you need to know is what? We're going higher highs, higher lows, higher highs, higher lows. Yeah, this is kind of higher. Higher low. We don't take out this. We come back to this demand area, come back to around 26, could happen 27, but we're not gonna drop below this one, right? And I can tell you by the end of this month, this thing is gonna probably bounce, right? It's gonna bounce high. By end of August, we should see around 40,000. I am super bullish on Bitcoin. However, I do expect a little bit of big pullback on Bitcoin. Come back around 26, 27. It's been ranging. Look at this range. Seriously, Bitcoin. Yeah, this is candlestick. Each of these candlestick is a full day. Let's count it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 17, 18, 19, 20. Really? Now, there's 20 days in a trading month. 5 days a week, right? Just a downside in Sunday. Well, Bitcoin is To be honest with you, it is 7 days a week. So, because it doesn't close on the weekend. So this is technically about 3 full weeks, almost. Let's call it a damn month anyway, right? It's a month worth of trading. It hadn't done a damn thing other than just going up and down, up and down, up and down. This is what we call sideways. This is ranging. Yes, it is. It's starting to break out of that range, huh? So we'll see. If it's going to come down, cover this imbalances, come to this demand zone Wednesday. Yeah, could happen, and then go up. Okay. All right, so that's Bitcoin. Let's jump into the foreign currencies real quick. Just look at Euro. What are you doing? You're doing exactly what I said you were going to do last week, is to fall, right here. 1.08 is our target. 1.086, 1.087 is the price point for Euro dollar. Dollar goes strong, Euro dollar fall. Okay, bearish on Euro dollar, pound dollar. What are you doing? Yeah, doing exactly what I said we're going to do. Continue to fall. Nice rebalance. All right, I'm expecting it to fall. Still, I'm not going to change this to 1.2605 for now. We got a long way to go. We're still going. We got more room to go, baby. Keep going. Keep going. 1.2605. I'm calling it, and I think it's going to happen. We're going to probably get it by Wednesday, right? Will it go here? I don't know, but we're going to have to break the structure to see. Okay, for now, I'm bearish on pound dollar. Our dollar. You already beat me, man. Come on, give me a break. I do expect to see a little bit more bearishness on Australian dollar, and I would call it still. Unfortunately, I do expect this to be a little bit weak, but that doesn't mean against like the other pairs, euro odd, pound odd, it's going to be going down the same. This is pound odd, pound dollar. So against the dollar, I expect this to fall. However, against other currencies like the euro and odd, it may still be bullish for the simple fact that it's just what is the better between the two weakest currency? Let's say, for instance, pound and odd. Okay, if they're both expecting to be weak, which one is a little bit strongest? And that's how those pairs is going to play out. And we'll take a look at this currency in a minute. New Zealand dollar. Wow, you went exactly where I called you out. 0.62. I do expect this to maybe pull back to just a little bit more, right? I'm gonna call it right here for now, just for Wednesday, and then boom, I'm gonna quickly bounce. Okay, dollar CAD. I'm gonna expect you to pull back just a little bit. Pull back just a little bit, right? A little bit more. Right here. No, I'm sorry. I'm expecting this to pop. Sorry. Dollar CAD. That means weakness on CAD. That's going to be inverse correlated to the CAD index, right? If the CAD index is expected to be weak, that means we expect dollar CAD to be strong, because the dollar is the base currency on the left-hand side. So I am expecting this to come to about 1.35774 dollar CAD. Let's go. And then after that, that's it. That's it for dollar CAD. We're not going to see dollar CAD up here for a while. We're going to start going down and start to rebalance down here to this level. Okay. Now, that doesn't mean we're going to range here a little bit, but we can expect dollar CAD for the remainder of the year to start looking bearish. Okay. That's when you want to start shorting dollar CAD and CAD starts strengthening up as the dollar currency start getting weak. But for now, we're going to be bullish on dollar CAD. Okay. Dollar Swiss francs. Yeah. That was Swiss francs. That was more about Swiss francs weakness. Look at all this imbalance. And this looked like the dollar index, but you remember how the dollar index looked? It dropped like this, like a 90 to 70 degrees. Would you expect this to happen, at least at a minimum? Yeah, 50% snapback, right? Well, I'm gonna still call it that way, but I'm gonna call it even further than that. But as of right now, don't know if it'll go this high, but I will call it right here. I think you're gonna come there. Okay, so dollar Swiss francs, be bullish. Let's go. Dollar JPY. About right there. Maybe a double top. 144. Dollar JPY, 144.203, and then let's drop. Okay. Euro JPY. All right. You went higher than expected, but you're right back to where I'm looking, and I like to see you drop. Okay, that's where I like to see it do. I like to see it drop. If it takes out this high, this right here, because it did do an equal high, and it's pulling back. If we do see dollars, Japanese strength, Japanese weakness, then we're going here. That could possibly happen. And then we drop, okay? If we break this. If not, I'm looking for this to come down. At least equilibrium should be the first one to be right there. Okay, nice imbalances here. We did clear some levels here, but it does have some room to go. It does. It actually does have some room to go up there. It doesn't need to go up there, but it could if it wanted to. From a weekly perspective, that is the weekly level of supply, and there is a great chance it could come up here, just as much as a great evidence for it to come down here. Okay, so as of right now, if Japanese weakness, this thing's going to shoot up. If we can hold here and hold below this level, we're coming down. If not, we're going here, and that would be a target for a great area to short, 161.858. Pound JPY. Come on. Let's keep going. All right, this is my target. Now, if we go up, then this is the area of interest that it could go. And you went in here before we drop. But as of right now, I'm looking for this area right here to at least equilibrium, and I'm gonna hold it. Nice imbalances here. It is ranging, and it's ranging right now because it's waiting. Yep, the Japanese yen. But look at all this inefficiencies. So it will rebalance. It's just a frustrating time of win. That's all. All right, CAD yen, nice drop, nice pullback, and hopefully we'll see a follow through. Okay. This is the top of CAD yen. Nice. Let's go to the weekly chart. So this is a very good area. We haven't been here since 2014. Before that was 08. So this is a very high level for CAD yen, right? So if you look at CAD yen, not something where you want to buy. I think you guys would agree with that. Something you would want to look for short. That was a nice, like a warning shot over the bow, letting you know, hey, we're coming down. So let's see if we hold. If we take out this liquidity, we're coming up here, right? This is a target for CAD yen. If it breaks, hopefully it doesn't go that high. Hopefully we can start to get some rebalances. It hasn't rebalanced the equilibrium right here. I like to see a bigger fall. However, I will say this: it should fall. Not so much of Japanese strength, but more about CAD weakness. Hopefully that follows through, right? So we'll see. All right, odd yen, nice, lower lows, lower highs. We still going? Let's go. Keep it going. I'm bearish. New Zealand, Japanese yen. Yes, love it. Thank you. More bearishness, which Japanese, geez, Swiss francs yen. What are you doing? Look at this. This thing created a new high. So I'm expecting now a follow through. Go to weekly, go to monthly. It looks very, very high. And that's because it is the highest point like ever. Let's go to another data point to get more of data to 1971, 72. Look at this. 1979 high. Price is up here right now. That's 1970 high. That was all-time high ever. And then we didn't come back till like 36 years later, 2015. We almost came close to that high, didn't. 7 years later, we did touch this high, and we exceeded the high. Now we're at the all-time high historical record, and you guys are clear evidence of historical situation that's going on with Swiss francs, especially Swiss francs, Japanese yen. All-time high, right here, all-time high in 44 years. All right, and you're about to see an epic all-time fall. Yes, that's going to be nice. You're going to witness all that and all this inefficiency. We're looking, I'm serious. We are truly looking. This is on like a monthly chart. This is truly what we are looking. All this is going to happen. Now, I'm not sure how long it's going to happen. This could be an all year, 2, 3, 4, 5 years, but we are looking for this to thing pull down. We don't even need it to go down that much for us. We're trading up here. Right, up here, yeah. We're selling. We're selling here. We're selling here. We're selling here. We're up here selling. Right? We're way up here. You go to your daily. Isn't that great? We're up here selling. This is where we're selling. We're selling up here. We're way up here selling. We're waiting. We're patient. More like here. Sell, 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 sell. We're way up here. We didn't start selling down here. That's a good thing. All right, we didn't start selling up here. We started selling up here. So we're going to get a very good space. Okay, first place right here, equilibrium. Let me go ahead and get this line right there. We just kind of refocus, looking at about 150 on Swiss francs yen. This is, man, if I wasn't trading Forex, right? And I would say, hey, man, what's the best pair to trade right now? I mean, just give me one. Swiss francs. Yep, Swiss francs JPY. This is the one, for sure. And pound JPY. Those two JPY pairs, those, if I gave you a JPY pair, those two, but sure, JPY would be your biggest one. All right, you're on. Let's go into some minor crosses. What we're doing. We're just ranging. Fall already. I think that fall is going to happen this week, right? It's going to happen on Thursday, hopefully. Euro dies, Australia kicks off. This may kick off on Tuesday night and just starts falling. This is a really good setup. You're on. I've been calling it, and I'm still going to call it. And that's my story. Take it to 155. Pound odd. Yes. Still one of my favorite currencies. Right? I got two targets for you. One there, one here. One of them is a nice 729 pip fall, and then we're going to have round two be 1500 pip fall. Round two meaning I do expect it to pull back, right? And look something like this. Come down, pull back, and come down. And put that in yellow. That's what I'm looking at. And I'm gonna put it right there. Yeah. 1.82, 827, 82, let's say 825. 1.825, call it even. You know, try to round these numbers up, like this one right here, 1.7449. We want to put like 1.745, right? Nah, that wasn't good. How about this? There you go, 1.745. I like round numbers because that's the psychological levels. So we're looking for this thing, and this thing is dropping. Man, it's looking really good. Let's go. Let's keep going. All right, hold on your horses. Because it's coming. And it's probably going to happen on Tuesday night, more than anything. All right, you're a cat. You're a cat. What are you doing? You're doing exactly what I want you to do. What is that? Fall. fall your CAD. Let's go. 1.4190 is your number. All right. Okay. Bearish on your CAD. Pound CAD. Yes. Fall. This would be target number 1. And then I like to see it come a little bit closer to this level right here, about 1.69. So we'll make that number round. Yeah, I'll make it round for you. 1.64500. That's it right there. And then we're looking around this number right here. Let's make this round number. Something like that. Okay. 1.64500 pound CAD drop. Let's do it. Okay, your NCD. What the hell are you doing? You're just like, man, you don't want to go anywhere. Okay, you took out that high, but you didn't take out this high, and you're looking bearish right now. Okay, let's go. You don't want to take out that high. What the hell are you doing? You're just ranging. Okay, guys. Your NCD. Yes, I'm bearish. Let's go. First target. 1.7. I like the 7,200. I'll take that. 1.7200 right there. First target, equilibrium. After that level, I like to see what it does after that. It may not even go lower than that, but it may. NCD, I do expect it to be stronger than NCD. So 1.72500, the first target, and then let's just take it down to even lower than that. 1. There you go, 1.67100. Your NCD, fall. Pound NCD. Oof, you're doing the same thing as freaking you're doing, except worse. It's like you're just ranging, doing nothing, just ranging. This is the trading range for your NCD, pound NCD. This is pound NCD. We're in a very strong supply zone, which we've been here in 2020. We were here back in 2016. And then we just kind of bounce. So every time we popped up here, we had a really big bounce. This is the real big pop. This is where you want to short. And this is where I'm shorting. And this is my target. All right, 1.9800 is your target, number 1, and let's go. 867 pips. And then my second target would be down here. Okay. Pound NCD, short. Catch with French. What are you doing? All right, you're down. I get it. Because Swiss French was strong, huh? Well, all we did was create it like a double bottom. You guys see that? Okay, that was nice. All right, let me go ahead and erase this. Get this set up for that nice little swing points. Let me go ahead and clone that real quick. Put that over here. And what do you think I'm going to? What would you want to do at cash switch at this level? Let me pull this chart up. What do you do at this low point? You sell? Seriously? No, baby, we're buying. Buy it, baby. Let's buy. 0.69584. Let's go. Euro pound. That was nice. And I'm expecting this to pull back. That's still the target. I'm bearish on Euro pound. Maybe about this low is where I'd like to see it go. $84,300. Yep. Okay, Euro pound, I'm bearish. Pound Swiss francs. Yeah, that was a nice drop. Pound Swiss francs. 1.65. I'm bullish on pound Swiss francs. This is a nice little range. Just trade this range. This is a nice setup. Oh, push buy on this one. That's another one. Odd CAD week. Let's go. Odd CAD. 0.97. 9200. 0.9200. Odd CAD. I'm bullish. That's nice. This is a nice bounce right here. Nice little bounce. Boom. Pull back. That's going to be kind of a higher low. And let's go. Odd CAD. NCD CAD. Same difference. Let's go. That was a nice bounce. Pull back. Target number 1. Target number 2. This would be more like 500. And then we'll probably see something up here like around 88.5. Okay, NCD CAD, I'm bullish. Swiss francs. Yes, yes. Let's go. We are bullish. Let's do this. That's a nice little drop. Okay, nice push. Let's go up here. Target number 1. I'm bullish. It's odd Swiss francs, NCD Swiss francs. Come on. What you doing down here? I mean, literally. That makes sense. I see. You want to go ahead and retest that low back in 2020. Like you got nothing else to do. Okay, that was a nice fall. Thank you. But yeah, look at this. These talk about long wait times. If anybody been shorting up here, I mean long in here, got that break, and then you've been long and then you get this one, you're like, what the hell's going on? Right. So in CD Swiss francs, I'm gonna go ahead and pull this right here. Okay, NCD Swiss francs, I'm looking this to be around 50, let me go 05, 500. That's gonna be a nice target there. And then we'll take the target up here. So NCD Swiss francs, I'm bullish. Odd NCD. Which one is gonna be? Which one's gonna be? Nice, nice. Tell you what, this thing is looking bullish. Nice, okay. I thought it was going to keep going. Look, it just kept going. It's just, lower lows, lower highs, lower lows, and it kind of gave me a double bottom and went right back here. So if it breaks this structure, as it's pulling back a little bit, I am switching my bias now on odd NCD. So if it pulls down, we could be going up, right? So let me call this up here. Odd NCD bullish. Let's see what it does. That would have got me, because here I was, looking at this imbalance. Nice, 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 and then boom, it pulled back the other way. And I would have lost that trade, planning on market structure. Obviously, you wouldn't want to short it down here, get this nice short, but this is a nice pullback. I'm expecting this to pull back and break. If it breaks this structure, obviously you would need to go on a lower time frame to see that. And then other than that, we're looking bullish. If not, it's going to go down. I can see it come down here, but I need to see it break the structure here. So this can go either way, but if you were to short it, you could, but you need to see some breaks of structure for odd NCD. But I'm gonna call it bullish for now. I don't usually trade this pair. Okay, euro Swiss francs. Yes. I am expecting this to go up. Even though I expect euro to be weak, I am expecting it to be stronger than Swiss francs, right? Because this is crazy. This is a nice structure. And I didn't think it was going to break this low. And it did. And Swiss franc pushed it. So I will say that it is due time for Swiss franc to pull this way up over here. Nice and balanced there. I love it. There's only a little small in here, but there is a little small imbalance here. So it could go a little bit more. It's already looking bearish. All right. You can see that right there. I don't usually trade this pair anyway, but I know some people just love Euro Swiss francs. And if you do, then, you know, that's fine. Yeah, that's a nice demand zone. I'm gonna go ahead and call it right there for now. Let the Swiss francs. I think Swiss francs Euro Swiss francs gonna drop a little bit more, so I'm gonna call it bearish. Bearish right now. To about right there. And then we'll bounce. Okay. Now I'll come up here. I'm gonna call it bearish on Euro Swiss francs. All right, that's all of our currency pairs that we went over. And then we'll start to look for setup on our daily live trade room. I hope you guys be successful. And in terms of this recording for the weekly top-down analysis, I have this recording out. And this will conclude this week's weekly top-down analysis.